We are experiencing technical difficulties. Please stand by.
The market is always having technical difficulties, but Money Life can help. Every Friday, we're talking technical analysis.
We've come for help and we're not leaving without it.
Are you confused by the technical jargon and terms?
This is what makes you confused! Don't you get it? This is confusing you right now, isn't it?
Our guests will talk about the techniques they use each day to analyze the market and tell you what they see now in some of the market's numbers and charts.
Please stand by. Technical difficulties are temporary.
They'll tell you about the trends they see and how you might react to them to plow through the market's technical difficulties.
Yeah, I'm pretty confused, all right.
So stay tuned and get ready to cut through the confusion with Chuck Jaffe talking technical analysis on Money Life.
You know, if you read my column that's going up at MarketWatch today, you will know just how confusing things are and why you'd be confused, because honestly, it's all based on headlines that have run in the last month. And it's not that like you can find people that have done a 360. It's that you find them sort of moving their heads around like The Exorcist, 720 degrees, 1,080 degrees, whatever it's going to be, multiple spins. And if you want to find out where things are going, well, one place you might turn is to my guest today. Her name is Toni Turner. She is the president of the TrendStar Group, and they take a very specific look at what's happening on the market. She's also, by the way, the author of Invest to Win. And if you are somebody who is interested in technical analysis and you want to learn how to not just follow this stuff, but apply it in a trading strategy, check out the book. For more information, she's on Twitter at Toni Turner Trade, and that's Toni with an I. Or you can go to the website. It's www.toniturner.com. Toni, welcome back to Money Life.
Thanks, Chuck. Thanks for having me.
Always a pleasure to chat with you, and it has been a while. It has also been a while where the market has done nothing if not sort of confound the experts. Like I said, I have no shortage of people that can tell me the market's going one way in 1 minute and, oh, we're ready to go to heck in a handcart the next. So what are you seeing right now?
I'm seeing a market that was very, very complacent and sitting back on its, interest rates are low, free money heels. And I had to keep reminding myself every single day that nothing goes up forever. And I had to remind the people around me that are like, we've got our feet up on our desk, we're smoking cigars, we're saying this is really nice, because the market was Teflon. There didn't seem to be any geopolitical or fortunately, economic event that would turn this market down all of a sudden. Now, of course, we're seeing that happen.
Yeah, we're seeing it happen to an extent. We still haven't seen any of the big moves. Are you seeing something out there that portends that, oh, by the way, the 10, 20, 25, 30% hit is coming?
I don't see, I could see 10%. I mean, right now, the S&P 500 is down about 3%. It's ugly to look at on a chart, but I mean, we can't argue with 3% considering the moves we've had up just since middle of 2011, 2012. I mean, this has been a glorious market. I've gone through many, many sectors and industry groups today, and if one were teaching technical analysis and wanted to show someone an uptrend that is so perfect that you would think we drew it on purpose, that's what we've seen. I don't see 20% coming. I do see potential, maybe 8% down. If we go down 10% here on the S&P, it'll take us to 1792, which makes everybody draw in a steep breath. But that, of course, if our interest rates remain low, given no geopolitical events come in that we totally don't expect, I don't see any panic here.
Okay, so there's no panic. Does that mean that if we see that kind of pullback, it's a buying opportunity? Not that we want to encourage complacency, folks, sort of sitting back and going, oh, okay, well, any downturn's not a big deal. But if we see that kind of a downturn, are we then going to be in a place where the market just kind of lags around and is flat for a while? Or does that take some of the pressure off and give us a chance to get a little pop?
Well, what I'm thinking here is if we hold above 1860, and again, that may make more people draw in their breath, but that's the 200-day moving average on the S&P 500. If we hold above 1860, and that happens, again, low interest rates and so forth, then I could see us meandering around through August and September, which are typically dull, if not negative months in the market.
Okay, so we could, and is there anything specific that becomes a catalyst in either direction? Is there anything other than, hey, we've got to take some of the pressure off that's going to drive this not horrible decline, but, the step back that you're seeming to be calling for? And is there anything at some point that then pops us back up and gives us any reprieve?
I do believe, Chuck, that we're going to have to get used to higher interest rates. And if the bond buying lets up as it's supposed to by, October? I mean, after all, the price of money moves the markets. It probably rules the world, and the price of money is interest rates. And if they start going up more decidedly than even our Fed expects, then I could see the market saying, whoa, we need to pull back here even more. I think that's the main catalyst now. And hopefully that's the only catalyst. We don't want to see anything else come in that's very ugly from around the world. So if we maintain, earnings have been good. Certainly the economy, whatever anyone thinks, to a degree is certainly healing and hopefully continues to do that. So with the earnings and the economy, if interest rates remain low enough, and once the market gets used to the fact that, yes, they do need to go higher again, at least a little bit, I think there's a rejigging here, a new mindset, maybe a new normal that comes in. And August and September may not be totally pleasant, but I would look for buying opportunities.
Well, an unpleasant August and September, that's not necessarily a bad thing if they are followed by buying opportunities. So we'll take that. It's not one of those things that says, hey, things are going to hell in a handcart. We've heard too much of that. But it's also not Pollyannish, as you point out. A little bit too much complacency for a lot of folks, and there's a danger in that, too. Toni Turner, thanks so much for joining me on Money Life.
Thank you, Chuck.
Toni Turner is the president of the TrendStar Group. She's also the author of Invest to Win. If you want more information, it's ToniTurner.com, Toni with an I. And if you want to find out what she's doing when she's not here, what other comments she's making, follow her on Twitter, where she is at Toni Turner Trade. Now, you just got an opinion on the market that was, not too rosy, but it also wasn't too dour. Now we're going to change that. Peter Schiff is up next. Yeah, he's not so sanguine about the market. You'll find out why when the August 8th edition of Money Life continues next.